Hello from Trend Signal for our review of the data and events the week beginning the 28th of September, the final week in September. We also have first Friday of the new month, which signals the release of the unemployment data in the United States, or non-farm payroll, as it's referred to. So quite a lot to discuss coming out this week. We start the week with markets in a fairly weakish mode following some more data out of China that continues to demonstrate how the Chinese economy is slowing. Industrial profits in China fell in August at their fastest year-on-year pace for almost 4 years. They fell 8.8% last month year-on-year, which is the third straight month of declines and their largest fall since records began in 2011. I know that's only quite recently, but that was the tail end of the financial crisis. So you can see how things are slowing there, and that's really set the tone here in Europe, and especially for the FTSE undermining the miners, not wishing to put too much of a pun in it, so they're particularly weak first thing Monday morning. Yellen surprised the markets a little bit last week with a relatively hawkish speech that underpinned the dollar rebound. We had the euro was up, down at 100 points, which is just under 1%. Sterling, that fell dramatically against the dollar, 350 odd points, 2.25%. I think that's in the space of 3 weeks. It's rallied 550 points and lost them all again as speculators, I guess, fret over the likely timing of a rate rise here in the UK, but a significant move nevertheless. Aussie dollar fell another 160 points last week, 2.25%. That's almost definitely on the back of disappointing Chinese data, and of course, a new Prime Minister adding to the renewed selling pressure of the Aussie. Precious metals, gold, but the trend really to a certain extent, up $7. You'd think with a weaker or a stronger dollar that dollar-based commodities like gold would have come off, but that certainly remains quite steady. Most importantly, the big news over last week was the move in another couple of precious metals that are not talked about quite so much, platinum and palladium. Platinum, which is used in catalytic converters for diesel cars, and with the concern over the VW emissions scandal, there's a feeling that perhaps diesel engines may not actually last in the US and may become uneconomical and unable to be sold because of the issues to do with the emissions. So platinum fell, $35 last week. Conversely, palladium, which is used in catalytic converters for gasoline cars, that was up $57, a whopping $57, which is just short of 10%. So a significant move there. And those are the consequences of the VW emissions scandal, which is also affecting VW bonds, not just the VW share price, with VW bonds collapsing. Investors have lost out not just on shares but also those bonds. It's been compounded this morning, and there's an article in the FT here stating that the ECB's announced that it has suspended buying bundles of loans backed by Volkswagen assets as it's reviewing the financial implications of the scandal. And I think bearing in mind that VW shares have fallen by a third in 10 days, the central bank is just reviewing whether to bar VW Securities from its bond purchase program. So that's really undermined sentiment there. And of course, that's affecting the shares on Monday morning as well, off short of 5%. So going back to the data this week, it's non-farm payroll week. Expectations are for a solid number. I think the market still believes the Fed will delay a rate rise until at least November or December. So hopefully we can rule out any will they, won't they, certainly for the next 2 or 3 weeks. However, non-farm payroll is probably the most important data release bar the monthly FOMC meet. One of the 2 mandates of the Fed is to maintain full employment, which actually is defined as a normal rate of unemployment of 4.9%, apparently. That's the median value over the long run. Current unemployment, as we can see here, is running at 5.1%. So you might wonder, why haven't rates gone up? Well, of course, there is very little inflation in the system at the moment. inflation is almost deflation. But I think Janet Yellen, the chairperson of the Fed, she does focus on wage inflation, and obviously as we potentially reach full employment in the States, those pressures could start to exert. And I think everyone knows that the effect of raising rates isn't felt immediately. So it's a very interesting balancing act that the Fed have to perform. Nevertheless, I think it seems that Janet Yellen has decided to speak a little more coherently about expectations, and that's why the market regarded her speech last week as quite hawkish, saying that there was still on the cards for a rate rise this year. Not October, possibly November or December, I guess. So data this week, we mentioned the unemployment data. The key one is on Friday, but we've got the usual ADP non-farm employment change on Wednesday at 1:15. The private payroll company has a reasonably good insight, although the number is quite volatile. We then have the weekly unemployment claims at 1:30 on Thursday. Then the main event of the week, the non-farm payroll data on Friday. Expectations for a 202 increase, which is, well, that would be pretty respectable, really. An unchanged rate on the unemployment rate of 5.1%. Other data out this week, we have more Chinese data out. The final reading of the manufacturing PMI for China, 47.2, a slight uptick there. And nevertheless, the market will remain quite nervous about that. Not that the Chinese markets will be able to react, because they'll be closed Thursday and Friday. There's a bank holiday Thursday and Friday in China for, I believe, National Day. Nevertheless, our markets will react if that is a particularly poor or positive data, possibly. So that's on the cards. We got another speech from Janet Yellen Wednesday, 8 o'clock in the evening, hopefully when most of us have finished for the day. Speech to the annual Community Banking Conference in St. Louis. It's not particularly important where it is, but the fact is she's talking, and what she says the market listens to. So that's something for the calendar. Otherwise, in the UK, obviously with that significant move in sterling, or fall in sterling, I should say, we'll be watching data points quite closely this week. Current account number out on Wednesday morning at 9:30. We also have the sterling UK manufacturing PMI out on Thursday, and also the services PMI as well. I think that's out on Friday. It's not actually listed on this calendar as is. That's it for all the data and events this week. It's month end, of course, month end pressures, and then the new month, and obviously, as I say, employment data. So it could be some interesting moves this week. Thank you very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.